Hello friends, welcome to Money Village channel. Today we will see how the Indian markets are going to perform over the next 1 week. We will analyze the positives and negatives. So with respect to the positives, one good thing is active COVID cases has got significantly reduced and it is down to less than 20,000 in India. If we see in Worldometer's website, we can see that the active COVID cases are 17,800 as of yesterday night in India. So this is a significant positive. Market valuations are attractive. Nifty price to earnings ratio is less than 22. Here, if we see the March 2022 price to earnings ratio, we can see that the Nifty PYE is 21.56, which is really good when compared with how we were in the last year March or April. So the earnings for the Nifty 50 companies has improved significantly over the past 1 year. So this gives confidence for long-term investors. Global markets are positive and US Dow Jones has closed 0.42% up. S&P 500 closed 0.5% up on Friday night. Nasdaq was down a little by 0.12% and SGX Nifty has also closed up on Friday night. So this gives a hope for positive up move when we start on Monday. Moving to the negatives, Russia-Ukraine war is still ongoing and we do not see this ending very soon, and as long as the war is continuing, like, we might not have any significant rally in the Indian markets. And FII selling is still continuing, though there were some small purchases in the month of March on few days, but the selling is still continuing. If we see on 25th and 24th of March, they have still sold more than what the domestic institutional investors have bought on Friday. On Thursday, this was less when compared with domestic institutional investors purchase, but on a net to net basis in March, FII still continue to be net sellers and they've sold more than 46,000 crores, while domestic institutional investors have pumped in 34,000 crores. People might be investing in equity linked savings schemes before 31st of March for claiming ATC deductions, and this might contribute to the mutual fund investments over the next 1 week, because people might do last minute tax saving investments before 31st of March, and this could help some inflows through the domestic institutional investor route before 31st of March in the next 4 trading days. If we see, global crude oil is closed at 112.58 US dollars on Friday, and this is a significant negative for India, since India is one of the major importers of crude oil. India is getting Russian crude oil at a lower cost, and that would be a temporary approach to ride over the high crude prices in the global markets. This is being increased in the last 1 week in India as at 80 paise per liter gradually, and this would result in an inflation increase in India, whenever fuel prices are increased, any item or goods which involves transportation will be having a proportional hike in prices. For example, the prices of milk or vegetables or any grocery items which will be required to be transported from one location to another for consumers will have an obvious price increase in the near future for India, and this will bite the consumer spending capability. India VIX is still above 23, and till India VIX goes below 20, the market uncertainty is still continuing. We can see India VIX is at 23.43. It has cooled down a bit, but still it will be good to have it less than 20 in the near future. If we see the 1 month graph, VIX has cooled down from 28.57 on Feb 28, and now it is at 23.43. Hopefully, we expect India VIX to settle down in the near future. Moving to technical analysis, Nifty has been consolidating for the past 6 days between 17,500 levels to 17,000 levels. In fact, 17,450 odd levels on the upside and 17,000 levels on the downside. So we did not have any significant up move or down move in Nifty, and we see Nifty to consolidate going forward as well for the next 1 week. So we see this price engagement area for Nifty for a long period of time. In fact, from November 2021 till now, we see that Nifty has been trading in this range of 16,900 and above levels on the downside, while 17,585 levels on the upside. So whenever Nifty goes to the 16,900 levels, we see that there is a demand coming at most of the times. We see 1, 2, 3, 4, and this is the 5th time wherein we can see demand coming in, and if there is a significant break on the downside, then only Nifty gives a wild down move, and we had seen that happening twice. Once during December 2021, that was when the cases of Omicron started to move very fast globally. Then the second time was when the news of Russia-Ukraine war broke out. So these were the two instances wherein Nifty broke the 16,900 levels comfortably and traded well below 16,900 levels. So it would be safe to make investments at levels of 16,900 and below, and at the same time, like, it will be wise to sell at 17,600 levels on the upside. So instead of doing a direct investment in equity markets, our approach to do investing is like to have a limited leverage investment using options. So what we will do is we will go to strategy builder, we will take Nifty options for the month expiring 31st of March, and we take 16,900 put options. We sell this at 79.15, and also for hedging this position we will purchase a 16,400 put option, and we also believe that Nifty wouldn't go above 17,600 considering the current market situations in the next 1 week. So we intend to sell 17,600 call options at 36 rupees premium, and to hedge this we buy 1,800 call options. The probability of profit is 62.31%. The max profit is 7.69%. The max loss would be 33.24%. But we shouldn't invest all the money that we have in this position. What we will do is we will deploy less than 10% of our capital in this trade so that we can make a profit of 0.769% over the next 1 week, in case if market has only traded within the range of 16,900 to 17,600. So considering whatever returns that we can make out of this trade, like if we do a simple calculation of having if we do a simple calculation of 7.69%, it works out to 0.0769, but we do not want 7.69%. Instead we are going to invest only 10% of whatever capital that we have. So we will make a return of only 0.00769. So assuming if we have a capital of 61,074, what we will get as part of this trade is 469 rupees, and we have 4 trading weeks per month. So if we make a profit of 469 rupees each week by making a trade like this, we can end up making 1,800 plus rupees, and the return on investment will be approximately 3% per month. So as long as we can limit the invested amount and deleverage the trade, we can make reasonable returns using this options strategy. So if we make 3% per month, and if we multiply it by 12, we might get up to 36.91%, but we haven't applied the compounding over here. So if we do apply the compounding, what we will have is 1 into 1.03 x power y 12. We will make more than 42% with this trade. Now we will go to Bank Nifty. Bank Nifty is a relatively weaker index when compared with Nifty when we assess it fundamentally, considering the oil price hike and inflation scenario that is going to play out in India. We will see technically how Bank Nifty is likely to move. So there are 2 potential patterns that we can see for Bank Nifty. One will be a inverted head and shoulder pattern, which will come like this, and the chances of moving in this pattern is very less considering the current context. And there is another pattern that is playing out, which is an M pattern, which we can see like this. We have support for Bank Nifty at around 34,700 levels, which was the previous low that was tested on 15th of March. So we hope Bank Nifty will take some support, because it was touched twice and Bank Nifty started to take some support and move. Here we see it has taken support at around 35,000. So between 35,000 and 34,700 levels, we see Bank Nifty has some significant support, and hence, like, we would take a trade to be on the safer side. We would intend to sell put options in Bank Nifty at 34,000 and to hedge this position we intend to buy 32,500 put options. Also, previous week we saw Bank Nifty had a resistance around 36,800. So we intend to sell 37,000 call option at 94 rupees premium and buy a 38,500 call option at 11.95 premium. So here the probability of profit is 75%. The maximum profit that we can get is 6.79%. The max loss, though, it shows 50.59%. If we do not take significant leverage and if we invest only less than 10% of our capital, then the max loss would not exceed 5% of our portfolio and we can make a profit of 0.6% in the next 1 week, in the next 4 trading days in this trade with Bank Nifty. If you like this video and if this video is of information to you, kindly do like, share and subscribe. Thank you.